The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more, into the breach do we go, dear friends. As always, we meet at this time.
The following takes place between 2 p.m. and 3 p.m.
And we get together and we start talking about things and other things. He was a little late to the party there. I snuck it in there early. He tried to get that sound effect in, but he just didn't quite get it today. Anyway, we've got a very interesting market up a bit. I'd been kind of moving away from the bearish side and back to the side of light over the last few days, mostly on the ability not to break the lows, also on lighter volume. Also, options were telling me that, we're probably in this 2060, 2080 range, maybe even a little higher for expiration on Friday. I was hoping to get a bigger low this morning to go off on trigger on. Didn't get what I wanted, but not an unexpected bounce, I think, after the last few days on lighter volume. And of course, as we go out to the end of May, if we haven't had our sell-off by now, it becomes incredibly less likely that we are going to do anything before the 3-day weekend coming up for Memorial Day. So what do we do? Well, we kick this party off with a little bit of history, and then we'll talk about what I think is going to happen.
That it's all just a little bit of history repeating.
It is all just history repeating. We've got an expanded version of history repeating today, and there is a reason why. But firstly, on this day in 1930, two Texas engineers founded a company called Geophysical Services Incorporated to use a seismographic technology to improve the business of exploring for oil. They changed the name shortly after to Texas Instruments. And so on this day in Texas, Texas Instrument is bored. What else do we have going on? This is going to take a kind of a long and circuitous route, so we'll play this.
And now, deep insights and random thoughts.
And a little bit of history to go with it. On this day, let me see where that's at. Abraham Wald, I think, in 1930. I should have written it down. I thought I could remember it. Comes to the United States. He was a young Hungarian, and for some reason, Hungarians were absolutely math masters back in that pre-war days. But he started and went to after kind of getting treated poorly because of his Jewish faith and birth, decided to head on out to Columbia University here in the United States, where he does a lot of work in math and statistics. So there are a few things that happened at this time, but he starts a little theory out, and that theory had to do, and we're going to get to how this actually applies to the stock market in a second. Like I said, it's going to meander a bit. Anyway, he gets some data, or someone gets some data, and all this data has to do with cats. Well, of course, even probably since about 1910, they started making larger and higher skyscrapers. Of course, I think right around then, the Empire State Building and others are starting to come out. People are starting to live in these. Cats pretty much are the pet of choice because, of course, it takes too long to get the dog down and get him walked if you live 50 stories up. But the data starts coming in, and people start looking at cats who happen to live higher than the 6th floor. And there's a bunch of discussions about whether or not cats above the 6th floor are just about jumping out a window or just as bad as the ones diving out at the 50th floor. They get a bunch of records and they get a bunch of data. Well, he starts working on this data as part of what he's doing, old Abraham Wald. It kind of sits on the back burner. He writes several papers about it. Deep into the Second World War, though, we are having our bombers and other planes shot to living pieces, but some come back. A general decides that the idea is wherever these things are getting shot is where we need to put some of the additional armor. You can't armor the entire plane. It'd never get off the ground. And, of course, there's actually even a shortage of armor, so they have to use it sparingly. So what do? They hire a guy to do nothing but come back and look at planes that finally make it back and put little dots where the planes have been hit. He collects data on thousands of sorties. And they think, you know what? This is where we need to start putting the additional armor so these bombers don't get shot. Why the Nazis are after them. Of course, they send the planes out, and absolutely no difference. The planes come back. Well, they say, well, I don't understand. That should have gotten something, should have gotten better. So they start looking around for real eggheads to figure things out. Well, Abraham Wald had already written these papers on something called survivorship bias, and that is if you only look at what comes back and not the ones that died, i.e. the planes that never came back, then you're probably looking at the wrong thing. He suggested that you should put the armor where the bullets are not, because if that's where the other planes were hit, and also at the time, if you got a bullet within about 100 feet of any bomber, it was pure accident. There was no person that was that good behind the stick of a German Messerschmitt at the time. So his thought was, with the average ability to actually hone in on these guys, put the armor where it's not being hit. And guess what they did? And bombers came back a great deal more, not hugely, but more. But that goes right back into the cats. Everybody had forgotten that you don't take your cat that fell out of the 54th floor that died. Maybe he landed, and occasionally they do. There was a theory that they basically reached terminal velocity after about 6 floors. But there's a lot to this. Now, when we get to the Dow, the same thing, or other indexes. No one ever really talks about ones that didn't make it. We'll talk about that when we come back, and the reason for dead cat bounces in the stock market.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So what we now know is survivorship bias has come in with cats and bombers. In the early 60s, many people start studying the stock market. There seems to be a lot more data coming at them. Computers are just starting. And they start dusting off the work of Abraham Wald to see what the Dow would look like if all those stocks that blew up during the Great Depression were included. And they start figuring out, well, maybe the Dow has a big problem, and that is, and most indexes, is survivorship bias. A great deal of this work gets dragged into the Wall Street Journal. And pretty soon, from the bombers and the cats, we start hearing a lot of talk about dead cat bounces in the stock market. And really what they were supposed to be was discussions about survivorship bias, but dead cats bouncing sounded so good that it got permutated into what we now know is a bounce of a stock that comes down very hard. So a long securitist route, but that's how we now have something called the dead cat bounce. It has to do with bombers, World War II, not World War II cats, but World War II bombers. The cats even before that, and Abraham Wald, who gives us the theory to always include the ones that did not come back as probably the most interesting part of the data that you do not have.
Now you know the rest of the story.
That's it. We owe that to bombers and the rest. I always wondered where the dead cat bounce went, and I had some time while I was sitting on a plane this weekend, and I searched and Googled the living daylights out of it. But yes, it was dusting off all this work in the 1960s, and it kind of made it into the Wall Street Journal and kind of made it into stock. But of course, everybody forgot the original reasons why it was important. Over the weekend, if you missed it, actually on Thursday night, and I missed it, it really didn't hit here until Friday night, there was a big discussion Twitter and some of these other companies think that they're going to make it big in China. One of the problems is someone got a hold of Twitter and publicly released all the personal information of China's most rich and powerful in the Chi-Com government and everything else. I continue to think it is going to be problematic for us, our U.S. companies, to do business there. But I can only think about Twitter's future in China after what happened. Needless to say, nobody is too happy. And, of course, we've got the head of Apple over there right now. But they gave everything: marital sets, dates, addresses, education, grades, marital status. And China's kind of getting a taste of its own medicine for hacking. Mr. Buffett, of course, did buy some Apple stock today with others. And kind of interesting. But my first thought was, well, he's buying the stock. But my second thought was, why would he buy it? And the easy answer would be, I'm thinking he thinks it's going higher. I suspect it is not. I've wondered about that $238 billion sitting over on the side. And I wonder if Mr. Buffett is not going over and having discussions with Mr. Tim Cook about turning Apple really into the next Berkshire Hathaway. They've got nothing but cash, a ton of it. And maybe with Mr. Buffett at the helm, guiding Mr. Tim Cook, maybe it will become the next huge monster fund company, buying other companies, yet buying other companies. I think he may just be interested in it, not so much in iPhone sales in 6 months, although he probably talk about it. But man, $238 billion. And what could Mr. Buffett buy with that? But just a thought. It is a mad market, and we're going to get right to charts. Not real early, but I did meander somewhat today. But I was very proud of myself of finding out why dead cats bounced was so appropriate in the stock market. A lot of stocks moving out here, and in fact, I had a few things that I didn't get on my slides. Square, see if I can find the, I think it is SQ, isn't it? SQ, yeah. Let's pop that chart up real quick. Just so you know, I don't know too many people actually trading Square. But one of the things that is important is lockup. We haven't had too many IPOs over the last year or so of significance, but certainly not a lot of stocks that have sold back to below their IPO pricings. But we have a few. Square's lockup period will be over tomorrow. It is already down at lows. There are a lot of people in this company that probably are not in management that would like an opportunity to sell. Tomorrow will be it. Watch for business there. SanDisk became a part of Western Digital on Friday. You will not have SNDK to kick around any longer. It's not doing Western Digital any good, nor do I think it will. But it will keep Western Digital from probably going out of business. So you will not have SNDK to kick around, SNDK, to kick around any longer. And, of course, it went out on Friday with not much fan or favor or flourishes. No marching bands, just a quiet end to the memory giant at a huge premium. What else did we have going on here? That's pretty much the things I had on my list to discuss, and I wanted to get into charts, as I said. Let's get down here to some other ones. Let's take a look at Apple very quickly. Did have a nice bounce, of course, on Mr. Buffett talking about buy them. Volume is not all that exciting. Of course, what is interesting to me usually is you find somebody that is selling a great deal of shares in a stock like Carl Icahn, and Mr. Buffett's there to actually mostly clean up on the sell-off. Of course, for every seller, there's got to be a buyer. and Mr. Buffett was it. Now, if you were looking at lows, you have to look at the lows on lighter volume. There were 160 million shares at $92 on August 24th. And we got in with that with about half on May 12th. You didn't, you pretty much went through that low, popped back out. You're in the trading range again. I don't think there's a great deal of upside for Apple. But again, Mr. Buffett bought it, so it's going to move at a glacial pace for a long time, but just enough to probably shake a great deal of the shorts out. One of the other big holdings in technology, of course, is IBM. That buyout from Mr. Buffett of that one has tried to keep it out of the lows, and it's tough to be very short a stock like Apple now or IBM, where he may throw a big wad of cash at it at any moment. We'll be back after this break. We've got email to answer. You can call me at 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
One stock that's all out of love for Mr. Buffett is AT&T. Not doing that badly out here, but he is all out of it from the report I saw this morning. Now, it had tested its previous high March 30th, which is $39.72 with 25 million shares. A nickel short, but close enough for me for 18 million shares. And that's about it. Now, probably the wheel's not going to fall off of this all over the place, but it is one that is on Buffett's no-fly list these days. If he sells the stock, he's pretty much done with it. I don't know if he's ever come back to a stock after he sold it. He owns it for a number of years. And I think, if I remember the report this morning, he's owned this one since 2000. So he's owned it for quite a while. Other things going on. We had a question in the den. Where is NVIDIA going? And all I can think of is to the moon. I thought this company had all kinds of problems. We talked about this on Friday. And normally you think the problems are related around sales and everything else. And somewhat that was the truth. A bigger problem was the incredible mess that the books were in. We talked about how literally all the people that I read the analysis had said sales are good, but more important, the books are better. And many of the funds that are risk averse thought that they could actually buy NVIDIA now. Who knows how high this movement is. Certainly don't have a lot of volume here. I do know that if you're in it, you probably take profits probably by tomorrow. You may get one more move up. If you want to buy this, you need to wait for it to come down to about $36.50, maybe $37 on light volume, and you're probably going to find support there. I don't see anything else going on so much. But that's it. Yeah, it is tough. Yahoo, not a lot of movement out here. A lot of discussion about who's going to buy it and what they're going to do about it, including Buffett involved some way. But I don't know if there's a great deal to be learned from any of that. Let's see. Had a list of stuff going on out here, if I can find it. Let me see. I had it. And then I lost it. Oh, there it is. SYN. Up 7% today. Synthetic biologics. In fact, I was hoping, let me put it that way, that we got a little bit of a pullback. Starting to see at least some floor in the biotechs. I was hoping for a test of this 240, and maybe that 241 was enough of March 17th at 241. It was into the candle with, 700,000 shares less. 2.7 million shares on May 12th in the IBB. Energy was a little lighter on the way back down. Options continue to show that this one would move higher. I was praying for another $10 down so I could buy some calls for Friday, but I have a feeling that that ship has sailed. I'm not expecting huge volume in it, but I do think that we could get to 270 or maybe even 280 on the IBB just on short covering and lower volume. Speaking of volume, let's check in. I really haven't discussed it. We're up 24 points on the S&P cash, 2.27 billion shares, which is about as light as we went down on Friday. So I don't know if there's a great signal to be had in this other than it's expiration week, and it's very tough to see the market down on that. What else did we have? I need to get back to the other one. Where's that at? Okay. PAM up 6%. PAM. PAM Energy SA. Don't know a lot about this company. Asymmetrical Triangle. SPIL. Guess they need to meet the quicker picker upper. Silicon Precision Industries. SPIL. Man, this thing had a nice big sign of strength. Pulled back pretty much to the bottom of it. It's back into the bottom of it again today. So let me get the profile on these guys very quickly here, and we'll move along. Provides semiconductor packaging and testing services to the semiconductor suppliers worldwide. Its packaging and testing solutions comprised advanced packages, substrate packages, and lead-free frame packages. Yeah, you can't use regular solder anymore, or as they like to say in foreign countries, solder. They won't say it's solder like us. It's solder, because that's actually the way it's spelled, but actually the way it started off too. But I digress again. Just a nice movement, but no volume out here. Let's see what they have to say. I know it was earnings and guidance, but see if there's anything in here that really pops out at me in the headlines. If I look at this one. Big dividend. I guess that's about it. Other ones of interest out there is Edit. Not familiar with this company else. EDIT. Come on. Nice little move in this one. Edis Medicine, EDIT. Nice bounce, even a little bit of volume out here. Time to learn about some of these companies I do not know about, or know a lot about. Operates as a genome editing company. Focuses on treating patients with genetically defined diseases by correcting their disease-causing genes. It has a proprietary gene editing platform. Okay, it's one of the CRISPR companies out here. If you're not familiar with CRISPR, it is kind of the equivalent of a programming language, a language for DNA. So I know several programming languages. This is the one to literally edit DNA and actually make the change in existing living humans. Company was, this is what it was. Used to be known as Genene, Gengine. I always wonder about companies changing their name. And, it's had two names. That's always a problem, isn't it? Let's take a look at some of the ones I have on my list out here. And as we go through some of these today. Winghouse, wanted to take a look at this. It's back up to its resistance level. It gets in about this $25, $26 level. It's made it to the $27 level, but that was last week, but much lighter volume than the March 4th high, $26.60, $26.42, 1.1 million shares. May 10th, 410,000 shares. It's back in the trading range. Energy very light on the way back up. I'm wondering if ag prices, including things like chicken prices, are headed higher. Buffalo Wild Wings. We'll look at that when we come back. WLD.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And thanks for all the email. We'll get to it in this segment. We just want to continue on with the thought of Wingstop and Buffalo Wild Wings. Of course, one's kind of a fast food kind of thing. The other one's more of a sports bar selling a lot of beer. Although Tuesdays and Wednesdays, they have half price. And why I tend to hang out there, and also for the trivia contest. But Buffalo Wild Wings, it's coming back up to its gap. Not a lot out there. I continue to think maybe the higher prices, maybe coming in agriculture, could put additional strain on some of these companies that have already been doing rather poor. And of course, Buffalo Wild Wings, what is it going to be? Probably late August before any big sporting events really fire up to get people back in. Always a kind of a seasonal business to begin with, but really kicks off in the late summer with football, the World Series, basketball, and then into the kind of the dead zone of the summer that we see now. But you don't like this coming back up with a lighter volume. 140, this one actually may be interesting out here. I have a question about Teva and others. Glenn from Las Vegas says, hello, Mr. David White. Can you please mention Teva's direction? I'm trying to go along on the equity. So he wants a buy point. Boy, this is kind of broken down through the lows. Let's go back a little bit longer. Okay, you've got some lows out here at 48 and 47. Those go back to April 25th, 2014 and October 15th, 2014. $8 and $5 million respectively. Of course, you had 25 million shares not that long ago. That was on the 6th of May out here. So you've got huge energy kind of tailing off into that now. That may be an exhaustion move for the moment, but I think you probably have to look at 48 and 47. What would probably also make me a little weary is this gap that goes back to the February 18th of 2014. So if you get through 48 and 47, then you've got that gap, and that gap takes you to the $45.10. But down, heavy volume, heavy energy. Man, I think you got to wait for $45, and I think you have to wait for the gap on that one. Okay, and other stuff. Get to some other ones I wanted to look at here. Huge gap up in GSAT. The FCC chairman is leaning in favor of approving Global Star's new system. And Yeah, that's it. So this one bounced fairly high. Of course, that started on Friday. Another move up today in the penny stocks. Well, I think that's everything you need to know. Let's take a look at their business. Profile. Mobile voice and data communication services throughout satellite worldwide. Company offers duplex two-way voice and data products, including mobile voice and data, satellite communication services, and equipment for remote business continuity, recreation, and emergency response. This talks a lot about maybe putting these on boats so that you have a phone wherever you go, GPS messengers, tracking systems, faxes. Guess they just, all these people with their 500-foot, $1 billion yachts need some way to communicate. And even us lowly folks may be wanting to go out 50 miles offshore and fish, maybe looking for a phone just the same. And these guys are actually selling a great deal of their stuff to maritime fishing, national resource, offshore drilling. You got to think that business is probably fairly lean. Maybe one of the reasons this thing got down to 97 cents. Other stocks, I got several out here. Vera Bradley had a nice run up and a very nice and polite pull back. The last gap up and sign of strength came when it broke the December 9th high, $17.42. That had 7.3 million shares. You broke it with how much volume down here? 2.6 million shares. And on the 29th, so it did break it with a lighter volume. Never got the kind of huge move that December 9th, 2015 high had in that 7.3. Now you're back into the trading range. And since you never had the sign of strength, that 1742 never became the level of support. And this takes you probably back to the $13.32 low. This little gap out here with 4 million shares, probably the first step in the move back down to $13.32. And of course, anything in retail pretty much got the letter A tattooed on its forehead these days. Some of the other ones that have been in these bigger trading range, Marriott Vacations has been bouncing off this $45 level where it gapped up to this $70 level on March 18th, where it had gapped down back on October 15th. So you've got these things kind of bouncing back and forth with lower highs and higher lows. This one's now back to its February 25th gap up with a sign of strength on 800,000 shares on fairly light volume. Going into summer, I don't know if you're going to see that much out here, but you kind of have to like the light volume, at least compared to this gap up from the 25th of February. Certainly a 25% volume of the gap up makes me say, let's see what else we have out here. I have a lot of stuff in my list. JetBlue, of course, all the airline stocks getting a bounce today. That had to do with Delta saying that they were going to lower the amount of flights and therefore hopefully be able to raise its prices a bit. They've all been in a funk. JetBlue not doing much out here. Certainly, I'd been watching this this morning earlier thinking, well, let's see what happens out here, because it has gotten into its February 8th low. That was $18.51, 12 million shares with 9 million shares. So it's off 25%, gone sideways out here. Delta, what is that, DL? Is that DL? No. Anybody in the den? DAL, thanks. And of course, these all had a nice little bounce today. We'll look at a few more of these when we come back. But got to kind of have to dislike that the energy off this March 21st high was a lot more than the move back up from February 9th. So not pretty, and did kind of test the low on a little lighter volume. Not all that great. We'll look at more of these airlines when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. American Airlines, we're looking at this. You got a bit of a bounce on these, but when I was kind of looking through these during the break, overall I don't like them, and that is because, of course, the energy was at least the same as the last leg up, and normally what I want to see is the volume really coming out, not just at the lows, but, of course, on the way back down. You can get a bounce out of those, but it's not the kind of bounce you normally get when the energy all falls out on the way down, and you also hit the lows on lighter volume. We looked at DAL and kind of the same thing. Actually, this one a little weaker, at least on the way down. We looked at JetBlue. And, same thing. The energy just isn't that much different on the way down and the way up on my power law vector indicator. I like to see these pullbacks come back down with much lighter volume. When we look at Love, Southwest, this one actually holding up a little bit better than the rest. Very interesting. You had kind of a nice congestion zone that went from the 24th of February to the 8th of March. That's kind of where we're in right now. What you have to dislike was the energy, even though we haven't made it back down to the February 8th low, the energy was fairly strong off the top. When you get into the 29th of April, you had 11 million shares on that down day. And even though we're getting a bounce out here, it just doesn't seem to really look like one of those bounces that probably will go a great deal out here. And of course, United Continental, same thing. Energy with my power law vector indicator number is about the same on the way up as it is on the way down. And I don't think you can make anything more about it than that. It is problematic to see that energy. But again, lighter volume at the lows. And when we look at the January 20th low, that had 11 million shares at 42.17. Didn't quite get there, but had 8 million shares, certainly into that candle. My guess is a bounce, and probably at least you'd want this thing to test that 42.17 January 20th low. We'll get back to some of the other stocks in my test lists that I wanted to look at. Let's see what else is out here. Bluebird Bio. Been watching this one. As we said, a lot of these stocks, I brought this one up last week, don't look all that bad down here at the bottom. This one I've been kind of watching because you had a higher volume low on March 29th that had 2.6 million shares on this one, $38.12. Got into it on Thursday and Friday of last week with 1.2 million, and then on Friday with 860,000. Doesn't look bad. A little pop out today, but still not a lot of juice. Let's do this so we can get a little bit more fine grain on it. The energy down is okay, but makes me think maybe there's going to be a little consolidation in this one. But, maybe it's the end of this week. Maybe it's next week. Some of these bios look like they're ready at least to start basing out a bit. It's going to take, I think, a surprise to blow out the bottom of this market. Now, maybe we get that surprise, but going into this time of year, everybody's starting to think about vacations. It's not uncommon to see volumes go light and a market where everybody is kind of bearish to be slowly squeezed out. 2.4 billion shares today is not a lot, but not uncommon to see, we get into the 20th of May and see a light volume throughout the rest of the month. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.